Good morning, guys. Welcome to this Wednesday, September 10th. And we are looking at a market which is trading higher in the overnight. Interesting, huh? After all this starting off last week with the little bit of a selling scenario, a little bit of weakness. We had the Friday jobs number come out and give us a little bit of a scare, and we're right back up again. They're right back up again, is ready to charge towards new highs. So market is shrugging off all the bad news or all the potential issues and trading higher, right in the face of a slowing labor market and the Fed potentially lower rates, which I think may be the reason for it. Maybe they think they're going to get more rate cuts than actually will be coming, but it would be hard for them not to cut rates at this point. So we'll see how that shakes out. But you can't deny the market is trying to trade higher, and even in spite of everything that's going on. Now we have news coming out this morning we had the mortgage app come out at 7. They were good. They were way to the upside across the board. At 8:30 we get the PPI number. And remember that last time that was a hot number. We'll see how it comes out this time. I think they're forecasting. Let me see. Consensus range is 0.3, 3.3. Yeah, 3.5 on the ex-food and energy. So yeah, in the threes. So we'll see how it comes out. But if that surprises to the upside, yeah, that could be a potential issue. Definitely is going to be some volatility around it. We get wholesale inventories at 10, an oil report at 10:30, and a 10-year auction at 1. So that's what we got going today in terms of news. But I would say the PPI number is going to be the big one to watch. Then I would say the 10-year auction, depending on how that comes out, could be a little bit of a market mover. But yesterday, we started off this on the long side of the market, watching these lower areas to see if they're going to trade below that 65.15 going into the close. They were right up against the highs. They did not. They popped to the upside. That's pretty much been holding on to this whole thing, these new highs going into the overnight. So we'll start from the long side, guys, and we're going to look to buy weakness. Against the 65.25, 65.15. I would say below the 15s, may want to take off the long bias and go back range bound. Still looking to buy down here at the 6400s and 6500s and the 6490s for rotations back up. So they start trading below 6490s, then I think this whole thing has been reversed in a bigger way. But I'll probably take off the long bias. I mean, this popped late yesterday, and the effect that the overnight hell could be quickly reversed. And if that's the case, we'll just go back range bound and see if they want to trade in this lower range. But we definitely have a setup which is indicating that we may want to take this higher. So notwithstanding the news, if the news comes in as volatile but not directional, we're going to stay on the long side until they start taking out that 6500, 6400 level, 6490. If those two comes out, you can see that level, these levels down here on the F1, you start heading right into that lower distribution. So that's kind of how we get started. And if they start getting into price discovery, I mean, that could be a pretty neat move to the upside. So stay on the long side if that starts happening. All right, so that's the ES to get started this morning. Looking at our NASDAQ and the bonds. The bond market is, and remember, we have a 10-year auction come out today. Bond market popped up here. They're holding around the 117s. So they're kind of up here. Yields come down a little bit. And so far, they haven't done any big retracement on that, which I would say is a good sign. I'll go for my F1 here. Here's my F1 on the bond. There it is. So here's your move out of the middle to the upside. Right back to this prior attractor at the 17, 15, 16s, and that's where they've been staying. They backed off a little bit, but so far not a whole lot. And I would look to buy weakness still. At least for today's session, we're looking at the 1626s and the 1620s, 20 to 22s. If it starts trading below the 2022s, I would take off the long buyers, go back range bound. Maybe last one to buy against would be the 1616, but if they start backing off like that, they're probably going to head right back to that lower attractor again. So Looking to buy weakness to get started, see if they can trade back up again. On the way up, not going to be super aggressive on the short side, but there could be short setups against the 1702s, 1710s, 1714-15s here, up to the 1716s for rotations back down. So the potential short setup, I would probably hold off to the short for 1708, 8 to 10, or 14 to 16 here, what I think would be the better short setups. If they, for some reason, take out the 1616 and stay on the short side, I think we have some bigger move to the downside happening then. And as I said, PPI certainly could move the market. So we just have to wait and see after they shake out the PPI number, what happens and where the market is at that time. But below 16, stay on the short side. Otherwise, stay with a slight bias to the upside. On the Nasdaq is not quite up here making new highs, but they are definitely pretty close. They're right up here against this upper edge at the 950s. And they just took out start pushing to the upside again. So I would start off on the long side again on the Nasdaq, looking to buy weakness against the 880s, 850s for rotations back up. I would say below 850s, take off the long bias, go back range bound. And I'm pretty aggressive in shifting that just because it's with the news, potential PPI news coming out, and also um, there's plenty of cross currents going on as well. These little moves to the upside, unless you really know why it popped late in the session, could pretty quick get reversed. Could be a earnings report come out, could be something else which popped the market like that, and then that could pretty quickly get reversed right back down below that 850s, and that takes us just back in this lower range. So, but at this point, excuse me, starting off from the long side, let's see if they can make a go out of it. And if so, if the PPI comes in a bit softer than expected, I think they will. We'll see. So starting off on the long side, not going to be very aggressive on the short side on the Nasdaq at this point. So both ES and Nasdaq, I'm starting off on the long side. Let's see how this is going to develop. But you can see it's been a nice little net buying going on all morning here since 5 a.m. Finally looking at oil and gold. And gold has been all over the place. And the overnight has been pretty rocky. It's been the yesterday's session popped it pretty good right from the get-go. Then this complete reversal. We were all the way down here at the 3660s at the close. That's pretty crazy. And then the overnight took it down to the 3650s, and now we're right back up to the 3700s. Or 37, we were up to the 3700s, now we're back down to the 3688s. And I would just start off from the long side. It's volatile, so I would still be looking to buy weakness at 3680s, 75s, 70s down to that level at 62, 63. At this point, may have to include the 55s for rotations back up. So buying all the way down here. I would say if you want to be, if they start taking out a couple of those, I would hop on the short side and see if they can ride it all the way down here to that 3650s again. So, but you had to be making that call pretty quick. So if the London comes out and maybe one more, maybe look for that short trade. And when it happens, I mean, so yesterday, it happens pretty freaking quick, and you had to be really kind of willing to step in front of it and try to hop on that freight train before it runs away from you. If you chase it and you keep chasing it, you'll be as caught when it reverses because it will reverse hard, and then you'll just find yourself getting shaken out. So gold, very difficult to trade nowadays. It's been very volatile, and cross currents makes it various, I guess, central banks buying gold or speculation on geopolitical issues causing a lot of cross currents. But that's gold. I would start off on the long side. Not going to be the only short I would look for is against that 36.96 to 98. Above that one, I think they're heading right back up again. So that's the only short I would consider at this point. Looking at oil. Oil has been pretty range bound. They're down here flirting with the 6150s. I thought yesterday was going to be an attempt to take it lower, but no. Yesterday closed towards the low, so I thought they were going to take it lower in the overnight, but did not happen. There's kind of sideways action there. So it could very well be that they're going to keep retracing back up to the 64, 65. So and maybe this just turns into V bottoms. But I've been waiting for them to make an attempt to retest these lows, but so far not much luck with it. So at this point, starting off range bound, looking for a potential drift back up again. So initially, I would look to buy against 62.90s, 62.60s. I'm going to sell against 63.40s and 63.70s for rotations back down. Pretty tight range, but that's about it for now, at least to get started. And then we'll see if they're going to squeeze back up towards the highs or if they're going to try to take it back and retest these lows. And you can see here we are right back here towards this attractor on the F1 in the capital flow chart. So pretty close to that attractor at 63, 64, and probably going to stay range bound there. All right, so that's oil. But we'll see how it shakes out here after the numbers comes out. Remember, I'm going to highlight it again after Friday. We're going to be rolling to the December contracts, as you know, but we'll touch on that later on as well. Alrighty, guys, we'll leave it there for now. And I'm going to just say good trading. We have a number coming out in about 10 to 15 minutes, the PPI number. So good trading. And let's see how this whole thing shakes out. All right, guys, later.